2019 was supposed to be easy for Tesla, but now it's a circus.
Tesla reliability sinks in Consumer Reports annual study.
US opens probe into Tesla's autopilot over emergency vehicle crashes.
Musk destroys Tesla image in Germany.
Tesla under investigation for Model 3 and Model Y steering wheels that freeze up.
Tesla disaster with fewest deliveries since 2022.
Tesla sales plunge. Biggest decline in history.
Wow. Okay. So if you believe all of these news articles, then Tesla should have fumbled from 2019 to now in 2025, right? If you look at the stock price, it tells a totally different story. It has roughly 20x'd since then. So the stock price and the market value is around 20 times than in March 2019. That doesn't mean that it's justified. But in this video, I want to go into the details of why I think that it is justified, or that it can be justified, and that it might still be a good opportunity to buy the stock, even though it's at an all-time high and it seems very expensive. So without further ado, let's look into it. I want to first look at some data, how many cars Tesla have sold over the past 15 years, how much revenue and profit it made, and how that was split up between the divisions. And then also look at some financial metrics. And lastly, I want to look at my bull case, so why I think that Tesla can still be bought as a stock and has a lot of potential for the future. So let's get into it. Hello, this is Lucas from Numata Finance, and before we get into it, I want to emphasize that this video, and actually all of my videos, are only for entertainment and informational and educational purposes, and they don't serve as an investment advice in any way. So let's start by looking at the actual data, the current situation of Tesla as an automotive company, but also as an energy company and an AI company. First, I want to look at how many vehicles were sold worldwide from 2010 to 2025 and compare that also to how many EVs and how many Teslas were sold. So first, we can see here the total vehicles that have been sold in millions was quite steady, between 60 and 80 million per year. Then let's look at the EVs. The EVs I've put on the right side of the y-axis. So it's also in million, but it's up to around 12 million. So we can kind of ignore the cars in the background because they have stayed quite stable over the last 15 years. And let's focus on the EVs here. If we look at the chart of the EVs in general, we can see that around 2020, there's a sharp incline in the EVs sold. With the Teslas, it's kind of a similar trend, although after 2023, it flattens down a bit. And also in 2025, it looks like it will be down a bit. Here I took an estimate for the Q4. I took the average of the last 2 years. So it will probably be around 1.8 million again, like the last 2 years, but flattened down a bit. All right, but as we know, Tesla is not just a car company. It also has made a lot of revenue with its energy division and also with its services and other, which also includes the full self-driving software. So if we look at the numbers here, these are all in billion US dollars. So first, services has had quite a steady incline in the last years. And in the last quarter, in the Q3 of 2025, it has had around $3.5 billion of revenue. Then if we look at the energy division, it has had quite the same growth curve. And also in the last quarter, the Q3 2024, it had around 3.4 billion. So it's around the same. And then if we look at the automotive business, the last quarter has had quite an increase compared to the quarter before. And it was around 21 billion US dollars. Now you can say that a lot of that is that in the US, the tax incentive was going away. So this was the last quarter where you can get the tax reduction for the EVs. And this is true, but if you look at the numbers also, in Europe and in China, it has had a lot of growth. So in Europe, it had 25%. In the US or in North America, it had 28%. So a bit more, but in China, it had even more with 33%. And Tesla says that most of that is due to the Model Y. And one more thing, this last quarter of Q3 2025 was the first quarter where Tesla Energy has made over 1 billion US dollars in profit just in this one quarter, which is quite astonishing. Okay, so now that we've seen what the revenue of Tesla consisted of over the last 15 years, let's look at the profitability and some other financial metrics. So for now, let's concentrate on the revenue. We know that already. It's again in billion US dollars and it's per quarter. So for each quarter, they've made that much revenue. And now let's look at the profit. As you maybe know, Tesla has not been profitable for a long time. But in Q3 2018, it was the first quarter where they were significantly profitable. They had some profits the quarters before, but it was very small. And since then, it varied around 3, 4, 5, sometimes a bit more, sometimes a bit less billion US dollars. All right, so then let's look at the market cap. So how much the company is valued at the stock market. Now I will use the right side, the right y-axis. And it's also in billion US dollars, but it's of course way more. But I think it's still interesting to lay them on top of each other, that you can see how, for example, the revenue and the market cap correlates. So if we look at how the market cap has evolved over time, we can see that in the first years it was around $2 to $3 billion. And then at the beginning of 2013, it jumped to over 10. And until around 17, so 4 years, it was always between like 20 and 30-ish. Then it had a big jump again in 2017 to over 40. And then the next years it hovered around 50, 60 billion US dollars. And as you can see, in the beginning of 2020, there was a big jump again. And since then it fluctuated a lot, but it was all the way from around 600 billion US dollars to, as it is also now, around 1.4 or even 1.5 trillion US dollars. And for the market share, it's also important for me to mention that in this graph, I have just used the number at the end of each quarter. So I don't have every single data point here, but only the ones at the end of each quarter. All right, and then as a last metric, I put in the PE ratio, which in this case is the TTM PE ratio, which means trailing 12 months. So it's not just the last quarter that is calculated in, but the last 12 months. So that's also why you can see before 2020, it's just 0, because 1 year before that, there were no positive profits. There was only loss. So this metric doesn't make sense if it's minus. The formula for the PE ratio is the share price divided by the profit for each share over the last 12 months. So a high PE ratio means that the stock price is expensive or that there's a lot of growth expected. And a low PE ratio means that the stock price is low or that there is a weak outlook for the stock. So if we look at the PE ratio, at the beginning of 2020, it spiked up to crazy amounts. And at the end of 2020, it was very high, almost 1,000. And then it came down, and around 2023, it was around 50 for around 2 years. And in the last quarters, it came up again. And right now, it's quite high again at 307 at the end of Q3 2025. Now, the P ratio, I think, is generally a good metric, and it's also interesting. But the problem is that it only considers the profit, as the name says, price-earnings ratio. But it doesn't consider the revenue. And if you look at this chart, then you can see that the revenue has grown a lot. Now it's like $25-30 billion per quarter. And the profit didn't grow as much, but you also have to consider that they are investing heavily right now in new products, in energy, in AI, in chips, etc. So I think the metric P ratio can be a bit misleading. I've put the P ratio on the same axis as the market cap. So the numbers are the same, but the P ratio is, as the name says, a ratio. So it's not in $1 billion, but it's just a ratio between the price and earnings. But no matter how you see the P ratio, the market cap is really high with Tesla. $1.5 trillion is a lot of money. So how can this be justified? What is the potential of Tesla and why do people still believe in the stock? So the basis for my bull case is the global GDP. Let's look at the last 20 years for the start. You can see here that from 2004 to 2024 or 2023, the GDP rose from around $90 trillion to over $160 trillion. So that's already quite a lot. That's basically the output of the world economy for each year. Then if we look at the last 50 years, it went from 30 trillion to over 160. In the last 100 years, it went from, I don't even know, around 6-7 trillion maybe to 160. And then if we look at the last 200 years and the last 500 years, the curve just gets more steep and the explosion is crazy. And I don't see why that development would suddenly stop here. So if we assume that this continues like that, and I think the companies that have benefited the most from this development in the last years and in the last decades have been the big technology companies. And new developments mean more efficiency. So new developments in IT and in AI mean that we have a more efficient world, and through network effects, we get more connected and we make use of more and more resources. And in my opinion, Tesla will be one of those big winners. And one big part of that is the full self-driving software, but more to that in a bit. But before we dive deeper into the reasoning of this, I want to show you a concept that is very important in this regard. And that's the concept of the S-curve. That's a well-known innovation principle. And as you can see here, you have the performance over time. And at the beginning, there's a very steep incline and then it flattens off. And that is regarding the performance of an innovation, of a disruptive innovation that is taking hold and getting bigger in the world. So that means that at first the adoption rate is very high and gets higher, and then at some point it shifts and it flattens out again. But the S-curve is not just a theory, it also shows in the real world. And I have searched for some examples, so you can see here some examples of the real world, of the market saturation of, for example, electric power, air conditioning or the internet, and it's always a similar trend. Okay, but what does that all have to do with Tesla now? Well, I'm convinced that Tesla doesn't only have one S-curve, but they have 3 S-curves that kind of build on top of each other. So the first S-curve is their EVs, so just the cars that they are selling. And then you could argue also the energy products. The second S-curve is then building on top of that, which they are developing right now, the full self-driving technology. So that's a software with which the car can navigate itself in the world. And for that to happen, the software needs to understand the world, it needs to understand each object, it needs to be able to predict what each object is doing next. So it has to have a 4D model of the world. So it has the physical world, but also needs to be able to predict how this will change during time. So this is the 4th dimension. And on top of that, they will have another S-curve, which is the autonomous software itself, which they can then put into the Tesla bots. So they're humanoid robots, which means that these robots can navigate the world and can do jobs, and they can help people, and they can all learn from each other. So it's a network effect of robots that have the intelligence to really help us humans, and also in factories and much more. And I think this has by far the most potential of all of these S-curves. And this will not play out in the next 2 or 5 years, but in the next 10 to 15 years, I think this will be massive. That's it for now. Let me know what you think about that. If you like this content, like the video and subscribe to my channel, and see you soon. Bye bye.